Welcome to ETM Analytics and TreasuryONE's weekly market review. We're kind of jumping in the middle of the week here, middle of April, massive movements that happened in the market starting yesterday morning. And to chat with me about it, I'm joined by Wichard, Cilliers, the head of market risk at TreasuryONE. Wichard, it all started, or kind of the big shift started, when the inflation in the US again came out stronger than at least what markets expected. And it just seems that this robust inflation does not want to move.
Yeah, good morning, Ilze-Marie. Yes, so inflation in the US is sticky. It's not going away anytime soon. And there was a lot of market commentators that's been saying it's not going to go back to the 2% target and people are anticipating. The big culprits that we've seen in US inflation that's been standout is stuff it's like core services. And things in core services is like vehicle insurance. That's up 22% year on year. Transportation inflation is up 10% year on year. Then hospital services is up 8% year on year. So the things that are sticky that people need in core, and that's why you see your core inflation is also up from 3.7 to 3.8, which is above the expectation. And in February we were at 3.2, now at 3.5. So it leaves the problem for the US. They're not getting back to the 2% target of inflation.
Of course, after on the back of this, we saw the Fed Fund futures again reposition. And to me, it's actually extraordinary to see, because we started the year with, I think it was about 6 or 7 rate cut expectations for 2024. We are down to a definite 1, with a maybe probability of a second one in 2024. So it was such a massive quick move. And I mean, we're only in April. So it's anyone's guess almost.
Yeah, so if you go back to end of November last year, that's sort of when the Fed started to pivot and say they're looking to cut rates in the US. Then the market ran ahead of itself. In the middle of Jan, about exactly 3 months ago, they were pricing 7 cuts for the year. That's sort of 3% cuts for so 2.5% cuts for the year. That's dialed all the way back between 1 and 2 cuts now for the year. So it was first price for March, then it was for May, then it was for June. But June, if you can look at the chart, you'll see June is down to less than 20% chance of a cut in June. A lot of Fed speakers came out yesterday and they're only saying cuts in September. If you listen to Neil Kashari, the Fed president of Michigan, he said the Fed doesn't have to cut rates this year. So it's interesting, but it's also interesting because that's going to spill over to South Africa as well, because SARB is not going to cut interest rates before the Fed's going to cut interest rates. And our own governor said they're also worried about inflation. They're still printing. We also printed high at 5.6% on the top end of our inflation band. So it's not just the US that inflation is going to show problems. It's going to spill over into South Africa as well.
That's the thing. And we know the SARB it likes to play things on the conservative side. So we can expect them to delay that. I think the last time I checked yesterday afternoon, we're now only expecting the first rate cut from the SARB to come in May. So it's a year from now. So very little relief for consumers and households in 2024 in South Africa, at least. But obviously, this also then plays into the continued narrative that we've heard from the Fed that rates will have to be kept higher for a longer period. And the dollar is smiling on the news of that. And, we saw the dollar jump, and as like with the inflation and the rate cuts, spilling over to other countries, this too wasn't all that good news for other currencies, including the rand, of course.
Yeah, so let's just look at the yen that's up here. So the yen has been under pressure because although they hiked interest rates and they became the last country to come out of the negative rate regime just about 3 weeks ago, they're still at 0.1%, while the Fed is at 5.25%. So the yen has been under a massive amount of pressure. They were previously the Japan government intervened in the currency at the 150 level. That didn't help. Then they sort of kept it baited at 152. That broke yesterday. So the dollar is king. It's smiling, and the economy is still rip-roaring. It's not under pressure like the rest of the world, and it's that US exceptionalism that comes through at this stage. So the euro had its biggest fall in 2.5 months yesterday, down over 1%. Aussie dollar was down 2% yesterday. The rand, like you mentioned, was down 1.8% yesterday. So the dollar just had a massive good day yesterday, and they just attract capital because people want to have securities. They want to go to the 2-year yields up at 5%, almost 10-year yields are back at 4.5%. So they're just seeking that yield out of the US, and that just attracts money into the dollar.
There are some concerns. People are coming and saying that a lot of the reason why the American economy has been able to remain so strong, even with the tighter monetary conditions, is the massive stimulus, obviously, that the US pumped into the economy during the COVID period. The risk that the Fed may be facing at the moment is not cutting soon enough, and when that stimulus starts unwinding, it will unwind very quickly, and it could dissipate very quickly, and it could exacerbate possibly an economic downturn. So definitely something to think about, obviously. On a second note, for anyone who wants to dive deeper into the Japan negative interest rates widen work, what happened, ETM Analytics did a full series on it on YouTube. You can check it out on Markets Magnified. But Wichard, we just want to quickly end on the rand, who it was obviously not facing only pressure from the stronger dollar yesterday on the back of the inflation figures, but markets had a very knee-jerk reaction to a poll that came out yesterday morning saying that, showing that the ANC is going to dip well below 40%. We had Zuma's MK party surging on the back of that. The thing is, we had a discussion with a political analyst about it. The devil is in the details, and the market should be careful of these polls and how they are conducted. And maybe there was a slight overreaction to this, but obviously for the rand, it wasn't all that good yesterday.
Yeah, see, so the rand was dipped below the 1850 level, and that's because our terms of trade in South Africa has improved. If you look at the gold price, it's up at all-time highs. That's retreated since a little bit. Platinum, palladium, copper, you can name the metals are all up. So that helps our terms of trade in South Africa, and we've seen the rand dip below 1850. You mentioned that poll that came out. The rand was at 1847. The poll came out, shows the ANC is going to get 37%, MK is going to get 13%. Rand knee jerks, loses 15 cents, goes to 1862 in a matter of minutes. So then people go and read the report and says it's only 1,835 people that they interviewed. It's not, the demographic is not correct. The poll, the
margin of error is also significant. I think it's between 2 and 3%, which is big
on that. Yeah, and then so before the US inflation came out, the rand was all the way back at 1846. So the big move up there, it reversed all the moves. So it had knee jerk on that, but then all of a sudden it lost from 1846 up to 1877. That was all the big dollar move. So that's that 1.8% we spoke about. The rand's slightly under pressure again today, but if I look at the screens here, it's euros under pressure. Everybody's still under pressure, so it's still the dollar that's king. And if you look at, we always like to look at what happens to the Aussie dollar against the rand. That sort of hasn't moved from the 12.22, 12.23 level for the past couple of weeks. So it just means that the rand and the Aussie dollar moves in cumbersome with each other, and it's all related to commodities. So for now, we're still happy with the rand in the 1850 to 1920 range. We still got a lot of risk in it, election risk, interest rate risk, when the first cut's going to come. So we just need to continue to monitor it. But for now, yeah, that's the range we're happy to play in.
Great. Wichard, thank you very much for your time. We will check in again next week as we move closer to the elections, and who knows what could happen. Have a good day.
Thank you so much. Bye-bye.